And it's very simple. Before I show you the chart of the Swiss franc Japanese yen, let's take a very good look at some supply and demand tactics and reason why this should exist in the first place. Basically, we expect when price comes down, price is going to come down to some sort of supply zone around here. When price hits that supply zone, we expect price to continue a downtrend. Now, after price breaks below this low, when price breaks below this low, what are we doing as a supply and demand trader? We are looking for the first zone that initiated this break. That is what we're looking for. And then immediately after that, we're looking for the extreme supply zones from this place. Now we're looking for two things. We expect price to come back here and continue its downtrend. That is one. This is one aspect of what we supply and demand traders expect. And then the next thing we also expect is if price doesn't do this, we expect price to come back for the extreme zone and then continue its downtrend. This is the expectation of every supply and demand trader when this is happening. Now, let's apply this for the first leg, and now we are in the second phase. This is the phase where we expect price to change, but we do not actually expect price to change in the first place. We are watching price. We expect this trend to continue the same way. Where price breaks, we aim for the supply zone again that started the initial move on the lower time frame, and we are aiming for, as usual, the extreme zone from this leg. So this is no longer relevant, and this is no longer relevant. Now, however, when you start to see price do something like this, so price breaks above the original zone, that is the first origin zone, the zone that brought about the break of structure, price breaks above this zone and moves up to this. We expect this extreme to hold if this doesn't hold. And if we don't see the extreme holding, it means price is going to break above this high. Now, the moment price breaks above this high, we have a new break of structure on the bullish side. So we have a bullish break of structure. Automatically, as a supply and demand trader, you have to look for what? Demand zone. The demand zone that led to that break. We are aiming for those demand zones, and you are aiming for the second demand zone, which is the extreme zones. There might be zones in between, and you would look for every one of those zones individually also and apply them into the chart. What are you waiting for as a supply and demand trader? You are waiting for price to come back to this zone, and either you see buying pressure for price to continue upwards, or you're waiting for price to make its way towards the extreme zone or any of the zones in between. So take note, there might be zones in between. You're waiting for price to come into any of the zones here from this break of structure 1, which is the origin zone, to the in-betweens, or this of zone, or this zone. Now, if price reacts from here, let's assume price breaks below this origin zone and price reacts from here. When price reacts from here, price will run off again.